How we all doing? Welcome to our market review. We're gonna start out. I'm gonna go over all the price action we had today, and then we'll go over like the bias at the end of the video, going over what I think the bias is going into the next week, or into the upcoming week. But I'm stuck. Basically, I'm a developing student. These are just my interpretations of price. Shout out ICT. It's weird when I do these lives because I can't like restart. So now I'm forced to go with that. So it's cool. All right, here's the news that we had today. We had no red folder news on a Monday, so therefore I can expect to see a little bit lower probability action. Although there can be some events, there can be some clean price action. Overall, I like to avoid these types of days, which is kind of what I did today. I kind of avoided it because I thought it was a little bit trickier, but at the end of the day, like there still was some decent price action, but I just didn't think it was as clean as I would have liked it to be. But what I want it to be and what the market is two completely different things. And upcoming, I just have the red folder news events. We have Tuesday 10 a.m. and then we have Wednesday 10 a.m. and then we have Thursday and Friday. We both have 8:30 and 10 a.m. news on. Wait, Friday I guess we don't have 10 a.m. news. I thought we had 10 a.m. news on Friday, but I guess we don't. But yeah, the upcoming folder. So honestly, what I'm kind of expecting with this is I'm expecting Tuesday to put either the lower high of the weekend, and then I think Thursday we could have possible end of the weekly range, but we'll see. We'll see what ends up happening. All right, and here is the daily chart. As you see, we formed a daily order block. We came in and we hit that order block nicely. We respected that, and now we're coming back down into this imbalance. We're starting to disrespect this, and in terms of where the next draw on liquidity is, it's this. For me, it's this order block here on the 4 hour that we're going to go into. That was really I was talking about that in a case study. I think that case study is actually I don't know it's uploaded, but I know I recorded it. But there's a case study I'm uploading that will be talking about that. All right, and here is NQ. We had those equal lows. We were disrespecting this imbalance, and then we drew into this imbalance here. So we had a distribution day today, right here into that imbalance. And if we look at YM, if you grade the balance that we had on YM was kind of doing the opposite. We kind of manipulated into this daily for value gap. Nice delivery here, but I I can't say nice delivery when it's YM. Honestly, I just like to use YM for like kind of just maybe typical SMTs, but I kind of try to stay away from it because it kind of can trick me and deceive me. So that's why I kind of just started using it outside of my bias. And same with dollar, especially recently. I don't think DXY. Obviously, it's nice to know what dollar is doing, but for me, I just don't think it's been that beneficial to my analysis. We came right into the 75% quartile of that imbalance, and boom, look at the delivery. We pulled off that and created a wick on that. And here's the 4 hour chart on ES. Nice little accumulation, manipulation into this 4 hour gap. And notice this 4 hour gap is that daily order block. So that's that same level as that daily order block. So this fair value gap is that daily order block. Right into there, boom, manipulation, and then we had distribution after that with all these failure swings here. And now what I was talking about is I think that this is the draw on liquidity. And how we trade into this, I think this could set us up for a Tuesday low week possibly at this order block, and then we could have a run on new highs, creating a market maker buy model. But it's all I gotta see. We gotta see what price does, but we can anticipate this to maybe unfold. And if it does unfold, that would be pretty like good timing because I was doing a case study at the time that looked exactly like this. So then I went over and I looked at that same fractal on price and it looks exactly like this. So if this does end up happening, if we do create a market maker buy model, which I guess we'll have to see what the market actually wants to do. If that does end up happening, that would be pretty nice to see. That'd be pretty cool to see. All right, and here is NASDAQ. If we look at this, I know it's a little bit messy as of right now, but here we have a 4 hour fair value gap. We have institutional order flow entry drill. Why do we have institutional order flow entry drill? Because we have an imbalance here to the left of us. On ES, we don't have that until here. So this probably wants to get traded back into, which is what we end up doing today. If we look on the 4 hour, we've already traded into that. We have institutional order flow entry drill. If we are bearish, we don't need to come back into here. So I originally thought that I wanted to see the price trade back into this, but I didn't see that. We had an institutional order flow entry drill, and I didn't really notice the fact that we had this here. So we have this imbalance up, imbalance down, and then if you project out 50% of that gap, boom, that's like right at that. The consequence is right there at the institutional order flow entry drill. And if you look at the 75% quartile, it gets respected right there beautifully. And then when we have our manipulation higher and then lower, we come right within that inverse for value gap right there. Here are the hourly charts on the respective. And as you can see, we form SMT. We end up forming SMT. NQ doesn't need to draw up in there. Originally, I thought, like, when I was reading this, that we wanted to, that I wanted to see that, but I was kind of just forcing my bias on the market. As you can see, we had these kind of equal highs here, but that doesn't really matter because we formed an SMT, and we were within this 1 hour gap here, and we took buy side here, and then we just distributed to these nice equal lows. Look how nice those equal lows were, and that also is the daily imbalance. So the fact that we have equal lows within a daily imbalance, that's high probability draw on liquidity. High probability draw on liquidity. All right, and here's this market maker model that we end up having. You can mark out standard deviation from this. We hit -2 to 2.5, which is possible reversal or a possible terminus of that market maker model. And then we have original consolidation, return to original consolidation with accumulation. Then you have your smart money reversal. Then you have your low risk buy. Then you have your redistribution, and then you have your second phase redistribution. Very, very, very nice market maker model. And then here we can map out standard deviation, and right now we're kind of at -3.5 there. And as you can see here, -1.5 is a possible reaccumulation zone, and that's where we kind of reaccumulated here. And this -2.5 is a possible reversal. You come back up, and then we come in that institutional entry drill and then seek these lows here. And old areas of accumulation are going to be new areas of distribution. As you see here, that's where we have our low risk entry, low risk sell. Wait, did I say low risk buy? Why did I said low risk buy? I don't know what. Low risk sell. Sorry, my bad. Yeah, and then there we see new areas of selling there. All right, and here's that on the 4 hour chart as well. Oh, and then well, yeah, mainly what I wanted to point out here is that this wick here, map that out, constant encroachment, right there with the SMT. Very nice delivery. Of course, it's hindsight. It's after the fact that it looks clear and obvious. But you're not gonna learn if you don't look at it in hindsight. And there's nothing wrong with looking at it in hindsight. Nothing wrong with that. And as you can see here, we take this area of sell side here at around before market open, and then we reprice higher right to this order block, which this order block is constant encroachment of that wick. That overlaps with that constant encroachment of the wick, and also this imbalance. We take buy side right here, and then we end up displacing lower. Looking back, it does look pretty clear, but for some reason, I wanted to see these equal highs get taken. But we didn't need to come back up in this 4 hour imbalance because we had that institutional order flow entry drill, and that's a BPR. We don't want to revisit that BPR. That wouldn't be as bearish if we come up and we revisit here. So this delivery was pretty nice. All right, and here is a 15-minute chart of that same fractal. As you can see here, we kind of had like we had consolidation at like 2 p.m. or like 12. No, sorry, this is 2 p.m. This is like 12. We had like lunch. Like, this is just consolidation. This is yucky. I don't really want to be in a trade during this time. And it just wasn't good action right there. And then we end up distributing, engineering a low right below sell side, coming back up, trading into this imbalance here, and then we end up having nice distribution. Second phase of redistribution right there. All right, and here is the ES chart. As we can see here, ES wanted to come up and take that buy side that we accumulated here, and the same thing. And look at the same concept here. We have a fair value gap in, fair value gap out. Why is this institutional order flow entry drill? Because of this imbalance here. This is a balanced price range. We shouldn't hang around this very long if we want to be bearish. We end up distributing lower to these equal lows that we have on the chart there. All right, and here was my like kind of struggles with this market open, and why I think that it was a little bit lower probability. We have low resistance liquidity on both sides of the range here. This is just low resistance liquidity, the upside, low resistance liquidity at the lows. Low resistance liquidity at the highs, low resistance liquidity at the lows. Ideally, if I'm trading market open, or if I'm trying to catch like the initial move at market open and possibly bleed into the 10 a.m. expansion, I want to see clear low resistance liquidity on one side of the market, and then high resistance liquidity on the other side of the market. As we can see here, we don't really have that. We have these lows down here, but these are Asia session, and then this is the previous day. So I don't think the algorithm really was interested in these lows until later, until we came up to buy side here. So as you see here, this is a 1 hour imbalance right here. And I believe I have a chart with that, but basically we take sell side, and then we have a 5-minute order block that we create, change state delivery, and then it's just home free. All this this is low resistance liquidity, but it's just like I want to see these lows get taken. But the fact that we have taken sell side and then we get that order block confirmed here, then we're up to buy side. And here is NQ. As you can see, this kind of was like a 930 like seek and destroy. We take buy side, sell side, buy side, sell side. Like this kind of, it might have been a seek and destroy day in terms of like the Asia and London, but this is seek and destroy conditions. Sell side, buy side, sell side, buy side, sell side. Like just seeking both sides of the range, both sides of liquidity. Which is why I think it was a little bit harder, and which is why like it's completely okay that like if you're seeing this and you're a little bit confused, that's cool. Like these days are supposed to be tough, and it's just best to avoid them. And where else did it happen? No news Monday. Yeah, and then we're coming into that 1 hour for value gap. We're taking this low resistance liquidity, rebalancing that 1 hour, and then displacing lower for the rest of the day. Here's the 1 minute chart at market open. And we end up forming SMT at this low, and then we end up expanding. No entry really given. Why? Because this SMT market wants to aggressively reprice. Look at this macro. 950 to 1010. Where's the move start? Where's the move end? That's like perfect. That's perfect delivery during the macro with just all expansion. All expansion during that 950 macro. Pretty nice to see. I mean, don't be mad to like not catch any of this. This just, I don't care. Like this isn't gonna happen every 950 macro, but when it does, it's cool to note. But this just isn't my type of setup, so it's therefore I'm not really gonna let you take it. And as you see here, we kind of have like short-term low resistance liquidity here. Where's the low resistance liquidity? Market opens right here. We're gonna kind of manipulate, entice breakout traders, slam into that low resistance liquidity, take sell side, form SMT. So I guess it does come like kind of higher probability that we're gonna go highs, but I think it was a little bit harder to read while it was happening live. So it's completely different to say in hindsight for me to come on here and talk about hindsight. And here's the 950 macro on NQ. We end up coming into this new week opening gap right there. Look at that delivery. Off that new week opening gap and new day opening gap right there. We expand higher. Coming to here. And then we'll talk about this fractal price. But notice here we have fair value gap in, fair value gap out. We reaccumulate in that zone right there very nicely. And same thing here. We have fair value gap out, fair value gap in, market reprices higher. And then we refer to that right here as well. All right, and here I would suggest like just studying this fractal price, because I thought this was a very nice market maker sell model. So if you want to go over this, I would recommend pausing or just going over this. I would recommend it. All right, and here we end up having a nice market maker sell model. So we end up having a change in state delivery right here after taking buy side. Buy side is taken, and notice how all of this is happening at those higher time frame PD arrays. You have constant encroachment of that wick. You have that order block. You have this imbalance. You also have other buy side taken over here. And most importantly of all, you have, or not most importantly of all, but to just validify this all, you have that SMT. So that SMT comes after all this framework is done. So we end up creating an SMT at a certain time of the day. 10-10 macro just ended, or 950 macro just ended. So therefore, we could possibly see another sell model if it makes sense. And that's exactly what we end up having here. We end up having change of state delivery on the 1 minute right here. Change of state delivery on the 1 minute. Then we come into this. We end up just tapping this order block wick. We never trade into the body. I believe we almost do, but we don't. I ideally like to see the body, but we didn't trade into the body. We kind of traded into the wick. The only time we'll use the wick is if it overlaps with the fair value gap, which doesn't occur here. And then we trade lower. We create an imbalance right here with a breaker. An imbalance with the breaker. Notice how that breaker body level is in line with this imbalance. Boom, right there. That could be an entry right there. Boom, boom, boom. We reprice around that. We're around that for a little bit here. Then we aggressively displace lower here. Where to? This BPR right here. And now it's like, oh, the model's over. Oh, I can't get active in here. Oh, this is gonna be a retracement back to buy side. No, these two lines here is a 5-minute fair value gap. So that's why I want to mark out. And notice what's happening here. We have a stop on here. In this 1 minute fair value gap, 5-minute fair value gap. Or sorry, no, this is the 1 minute fair value gap I marked out. But there also is a 5-minute fair value gap right here. So if you look at this on the 5-minute chart, there's gonna be a 5-minute fair value gap. And then we end up accumulating more shorts here, distributing. And right here, this is a reclaimed order block, which I'll be doing some more backtesting on. So I'll probably put those in here for some more. But right here, we have an order block. It causes a short-term displacement in price. This is on the left side of the curve. This area is gonna get referred to on the right side of the curve. Boom, right there. Projected on time, perfect delivery. And then that line right there is also this order block right here. So you also have that confluence, and then boom, we distribute to sell side. And notice here, in terms of swing grading this model, where does low risk entry happen? Pretty much right at the 25%. Right at the 25%. Where does the stop hunt happen? Right at the 50%. This high right here gets traded. That's your soup. That's your stop hunt. And then where does the silver bullet second phase of redistribution happen? Right at that 75%. Right at that 75%. So in terms of swing grading this, everything was on point. Everything was on point. You had all these things in line for this, and I thought that this was a pretty nice model. Also, keep in mind, what is the higher time for draw liquidity? The higher time for the draw liquidity is lower. All right, and here is, I also want to show standard deviation, and old areas of accumulation are going to be new areas of distribution. As you see, these two beefy down close candles are right where we distribute lower. And also we have this candle. It's pretty much this candle. I use this. I didn't map this out because it came a little bit messy. And here's that breaker, that old area of accumulation becomes new area of distribution right there. Then you have that reclaimed order block level. Notice standard deviation does map up nice. Negative 1.5 right there. That's your second phase. And look at this. You have your last manipulation leg. I didn't do the first. I didn't even map that out. So I didn't map out the first standard deviation or the first retracement leg. I never did that. But then we end up coming in at -2, -2.5. Where do we end up retracing to? A premium PD rate in terms of this dealing range to this dealing range. Maybe OTE of this dealing range. That this might be an OTE retracement. It looks like it. And then we end up distributing lower. And then -4, we fall slightly short of that. So we almost come into -4, but we don't quite. And boom, we end up repricing higher. Well, this was a very nice study, very nice market maker model. Just want to point that out. And here, throughout the rest of the day, we didn't really have too much. We just consolidated around this. I simply am just going to mark this down in time that, like, I'm not going to look to trade this. And normally I like to trade AM session. I don't like to trade PM session. So on top of that, I didn't really look to really engage with this just because there's just, like, for me, I don't really need to trade this. I don't really want to trade this. Accumulation, and then we kind of could have some form of a model, come back into this up close candle, and then boom, we distribute lower. And then from this leg to this leg, standard deviation, -1, maps out very nicely. And here is like kind of, I like doing these. These are kind of nice. They make it a little bit nicer to read. So we end up having London high day. So this was a classic sell day. London high day, New York open, or New York provides retracement into probably like a breaker right here. You could have mapped that out. I didn't. I used the hourly fair value gap instead. New York retracement, and then we have just expansion throughout the rest of the day. accumulation, displacement. Then yeah. Ooh, I kind of messed this up. This needs to be lower. I kind of messed that up. Okay. And here is it on ES. Gonna have 9:30 open. Boom, boom. SMT gets formed at 10 a.m. And then we have what we discussed going over. And now I want to go over bias going to the next days. I want to use TradingView because I like using TradingView instead. Oh wait, hopefully my of course I deleted my Nasdaq one. Wait, I'm gonna fix this. All right, we'll do analysis on this. So basically, within this, here, I'll hold up. Sorry, y'all. I'm just gonna hide it. Oh, it doesn't want to show up anyways. I guess it's cool. All right, so basically, we're now within this daily imbalance here. We've taken these lows here. I'm more looking at ES to formulate a bias. I want to see if we do want to offer fair value at this point in time here. So my eyes are really on this order block, like I've been discussing. I want to see, does this possibly generate a smart money reversal around 10 a.m.? We'll see what ends up happening. Overall, I'm gonna be bearish unless if we manipulate at that. I think this is more likely that we're gonna seek this to then possibly have another buy model here. We'll see what ends up happening, and we'll see if that is the case. If that is the case, then I guess we'll have a market maker buy model. I don't really like this high. I don't really believe that we're gonna like really top off of this high. So I guess we'll see what ends up happening. Obviously, order flow overall is bullish. So I'm looking at this as it's possibly just a retracement. These down close candles will now become an order block. This might become a change of state delivery. And we might see higher prices. Say we want to go lower. I'm looking at this low here. Not this imbalance. I'm looking at this low. And then possibly these down close candles. If you look at YM. YM is a little bit tricky in its delivery. YM is within a sell side imbalance. We've come up in the third quartile of that. We do have these failure swings lower. We'll see what ends up happening. The fact that YM is still bullish, and we could possibly be bullish on the indices now. And now our bias is switched to indices. I think that we could have a buy program up to these highs here. So we'll see what ends up happening with that. In terms of dollar, let's start from a weekly. Well, let's start from a monthly time frame. So have it. So overall order flow on the monthly has been bullish. Right here, we're respecting down close candles. We had this monthly order block that we respected. We're now creating weekly order blocks. So in terms of this, I'm still looking for these highs. So that would lead to a bearish bias on indices, but I just don't think it's as like crystal clear in my opinion. We currently have bullish order flow right here. Like that's just a bullish signature right to this order block. I swear something changed within my chart. Something changed with my chart. But we took sell side here. I swear these used to be posted as equal lows in my chart. And I swear we delivered like straight to that order block. We kind of did. Straight to that order block. And then I would rather use this order block. It's the lowest down close candle on the daily. Boom, that got respected. We traded right to here. And now we're within kind of this order block right here on the daily. So I think that this we'll see. We do have equal highs here, but I kind of just want to see what ends up happening. I'm not gonna really say much, but I just want to see what ends up happening. This could be one of those because we have all these equal lows posted and we never really traded that weekly imbalance here. And then that would lead to a little bit higher prices on indices. And then we're just generating all this liquidity. We're just absolutely melting everyone that thinks that this will be a market maker bot model right now. That's just a thesis. And then once we trade into here, once ES meanders around, this is like long-term analysis, and I might need to do a little more tools with that. But as soon as like ES and NQ kind of meander around all-time highs, and then kind of like election time, we really displace lower to scare everyone, and then after election, we then pump back up to seek new highs. That could be something. That could be something, but that's just like, that's just not relevant to what price is doing right now. Overall, we have taken a buy side here. I don't know. We'll see what ends up happening. I still do like this imbalance. I still do like us possibly trading into this. But if we do that, that would be bearish. I guess we'll see what ends up happening here. Overall delivery here, we have traded to this buy side imbalance here. So we'll see what ends up happening. We'll see what ends up happening. Okay. Hey, how's your month been? My month, I've been chilling, bro. I've been chilling. I've just been tape reading. All right, let's look at ES. Well, sorry, Euro USD, and then let's look at GU as well. And look at this. We've taken the sell side, and now we're just consolidating here. We're referring back to this order block 1, 2, 3. So I don't really see this as a bearish order block to create lower prices. If you want to create lower prices to head to these failure swings, I feel like we would have already. So if we really wanted to use this as a bearish order block and this as an inversion, I feel like we would have already. So the fact that we have failed to do that makes me think that we might want to displace higher, possibly. But I would do like this as a top within this market. We've taken we take buy side here, high resistance signature up here, displacement lower, imbalance paired with that order block. That was nice delivery. That was nice delivery right there. This order block paired with that fair value gap, ooh, very nice delivery. And then you kind of have that breaker that we respected as well. So we have taken minor sell side, and we're kind of just consolidating here. We're creating low resistance liquidity here. So I think that we might have to honestly trade back up to this high here. We'll see what ends up happening. We do have this kind of balanced price range, but I just don't like, if we are bearish, I would like to see more displacement lower, and I don't really like this delivery here. And the fact that EU did that when we were posting lower lows on ES and NQ, a little bit concerning. Let's look at GU as though. Okay, what's this level? Okay, I haven't peeped this chart in a second, but on GU I have been kind of bullish, but I want to see this fair value gap here. We're now within this weekly fair value gap. Also, these last two down close candles. Is this a monthly order block? Let's see. Yeah. Did we deliver right to that? Ooh, we did deliver right to that monthly down close candle. So we did that last week. Also back within these two down close candles here and a weekly fair value gap. The only thing that I don't like is these wicks here, and the fact that they're in this direction, in a high resistance direction rather than a low resistance direction. If these were in a low resistance direction, it would be a lot more inviting to take longs here, or to be long bias here. But yeah, we end up having an up close candle here. Let's see this price right here. Let's see if that wants to be an order block. We've now had that change in state delivery here. I would like to see us close above this to really kind of be solidified bullish. We'll see what ends up happening. We have buy side that rests above here. I would like that. We'll see what ends up happening. In terms of bearishness, I don't really. I would like to see this down close candle get traded to if we are bearish. So like this fair value gap, if we are bearish, could be a possible draw on liquidity. which could be the case. We'll just see. We'll just see. No harm, no foul. If it's not what ends up happening, we don't care to be right. We just care to see what price does. All right, here, let's look at Bitcoin. So I was thinking that this was a market maker buy model for like the longest time, you guys know. But the fact that like I wanted to see a snappier reaction off of this, but we kind of just failed to do that, and we kind of just took it's kind of like equal highs. I really don't know with Bitcoin. I really don't know. I maybe want to come back down, purge this low again, but we'll see what ends up happening. This should just be a good case study. I do want to use this indicator. This indicator is nice. IPTA standard deviations, I would recommend it. It's pretty cool. It kind of just maps out standard deviation for you. But I will say, mapping out standard deviation yourself is always better to do. Do we have this retracement leg? Okay. I don't know why I didn't map out this standard deviation here. I feel like that would be a better projection. Day 2 to 2.5 lines up nice with that low. Overall, this thing is just melting lower, so it's hard for me to really say. Especially since Bitcoin 2, I don't really want to generate a bias. All right, now are there any other? I do want to look at like some other forex pairs while we're at it. While we're just here analyzing forex. Okay, so let's look at the monthly. What is order flow from the monthly? Overall, it's kind of bearish. It is bearish. We're back within this up close candle here. But the fact that we've traded 1, 2, now this is our third time trading that up close candle on the monthly, it'd be a little bit less bullish in my opinion, or bearish in my opinion. You have this weekly imbalance here. And now we're kind of consolidating around this order block level. In terms of weekly order blocks, we don't really have any that are salient. Oh, I do like this mitigation block here. I would like to see this trade into this order block right here. Post higher. Yeah. I would like to see that end up happening. UCAD. Oh, ugly. Okay, kind of consolidating here on the monthly. So, try to look to avoid this. We have this up close candle here. Traded into once. Now we're back within it. We have a wick on this candle. Where is mean threshold of this candle? Okay. Let's look at 75%. So we respected 75%, but not mean threshold. Okay, so we have this. I don't really love it. I don't really love it. I would more look at this level right here. The fact that we haven't expanded off this level doesn't signify that this is bullish. We have taken a minor buy side here. I just don't like this. I don't like that at all. US peso. I don't even know why I have that. Yeah, I think that's all analyze. Oh, I do want to check in on gold. I haven't checked it on gold in a while. Gold, and then I think we'll call it after gold. Okay, let's look at gold. Monthly, we're creating wicks. Ooh. I would want to see this monthly for value gap get traded into. I would like to see that. We're kind of like at a deep premium, so this for value gap would be a nice little target. In terms of the weekly, what's the weekly doing? Ooh, weekly, we got a nice up close candle here. Ooh, we respected that perfectly last week. We now created a wick. I would like to see lower prices posted on this pair. Oh, look at that delivery. Look at that delivery. Very nice. Very nice delivery there. So right now, I'm looking at these lows here, but overall, I would try to avoid gold. I don't really like gold. We have a 4-hour imbalance here. Oh yeah, also all these failure swings. So I'm looking at these lows here. You now have more failure swings. Ooh, I would like to see this fair value gap get traded into. It overlaps with this imbalance here. This should be a balanced price range. We shouldn't need to displace any lower. Do we also have that mean threshold of this candle? If you map that out, this could be a good candidate. So that's kind of what I'm looking at. Overall, that pair looks bearish, or gold looks bearish. All right, let's see what ends up happening tomorrow and how this sets this up for the weekly range. I wouldn't be opposed to Tuesday low of week. What type of... Let me go back to the slideshow. We have 10 a.m. news tomorrow, so I'm expecting probably a Judas swing tomorrow within the market. We'll see what ends up happening. We had no red folder news. Kind of had seek and destroy around market open. So we'll see what ends up happening. And yeah. Anyways, I appreciate you guys. And I'll catch you guys with the next one. I'll do these every single day. And I also have case studies rolling every single day. So keep up with those. Anyways, I'll